Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And the US-Iran ceasefire is in danger of collapsing following further hostilities, with Iranian missile and drone attacks on Kuwait damaging its airport and killing at least one person and injuring dozens. Iranian media are reporting the Revolutionary Guards had attacked the headquarters of the US Fifth Fleet in Bahrain and a US airbase. US forces carried out strikes in southern Iran targeting missile launch sites and Iranian boats seeking to lay mines. Meanwhile, US service sector activity lifted last month as businesses preemptively placed orders and replenished inventories in anticipation of shortages and higher prices stemming from the war in the Middle East. The ISM survey, meanwhile, revealed a measure of prices paid by service businesses jumped to the highest level in nearly 4 years. And in the Fed's latest beige book, it reported that energy-related costs tied to the conflict in the Middle East were the primary driver of inflationary pressures, with spillovers into shipping, packaging, groceries and fertilizers. US Treasury yields rose on Wednesday as rising hostilities in the Middle East following strikes by both the US and Iran sent oil prices higher and reignited worries about sustained inflation pressures. The US two-year yield rose to 4.09%, the 10-year at 4.5%, while Aussie three-year government bond yields rose to 4.6%, the 10 just under 5%. And a quick look at where the Aussie dollar is tracking this morning. It is at 71.3 US cents. Well, markets are sending mixed signals as investors navigate record highs in equities, shifting sentiment in precious metals and fresh questions around crypto demand. Let's discuss all the technicals with Zoran Kresovic from Blueberry Markets, who joins me now. Good to see you, Zoran. So a bit of a retreat on Wall Street, but we do keep hitting these records. Is the S&P 500 at or near record still a buy in your view?
That's a great question, Julia. What I can certainly say that as opposed to a FOMO, which I think many believe is a narrative and story behind the moves from around April lows, which on S&P 500 has been around 20% upside. We could also call it FEMO, and that's what I heard the other day from someone mentioning it, which is obviously fabulous earning momentum. And we've actually seen that on S&P 500 and US globally, US stocks globally, I should say, with this AI narrative driving all the headlines, and as a result, obviously S&P 500 had a stellar results. In fact, actually this year, it's been 25 times up until yesterday, when S&P 500 has actually reached an all-time high. Now that obviously demonstrates a pure bullish market sentiment, a rotational play, as well as momentum heavily skewed towards the long side on US equities. So look, I mean, overnight we've actually got a bit of mixed news coming from Middle East. That's obviously adding a level of concern. I think investors should be looking a little bit more forward in terms of the guidance, especially if we see re-escalation of Middle East tensions, which could obviously flood up the inflationary pressures, and in fact actually oil in particular, as we've actually seen recently from Exxon and Chevron executives who are actually saying that warning, I should say, global inventories on oil are dangerously low at the moment, and in fact actually crude oil might spike up to around $150. That would obviously push into the inflation. Fed would probably likely start driving even more narrative and news around potential interest rate hikes, and that could obviously flee into the US equities, and perhaps maybe we might get a short-term breather. But the levels that I'm looking at the moment, Juliet, to actually reflect in this chart is around 7,100. If you do get a pullback around those levels, I don't see that as a breaking news. I would like to think it's more of a consolidation, perhaps before the next leg up. But right now, it's a solid bullish sign. US equities are flourishing, and I don't see any other instrument or any other asset class that's performing better than that.
All right, Zoran, let's go to gold then. Bullish or bearish?
Oh, it's a big call. Look, I mean, it's an interesting one because, as we just mentioned, S&P 500, and if you have a look at the Nasdaq and top 7 magnificent stocks, like a lot of their rotational play from hedge funds, fund managers is actually heading into those stocks. And how could it not when you got amazing earnings that are coming through? And I actually see a lot of that volume driving and getting out of gold and silver in particular, because obviously gold has been a darling of the market over the last couple of years. However, in saying that, there hasn't hasn't been a yield that you can earn on the back of gold. So you can actually buy it as an ETF or physical, and you can hold on to it. But as a long longevity, it's probably hard to get a rate of return, especially if you have a look at this chart. And ever since it reached 5,608, so we can see this downtrend line still playing and having a very, very strong momentum. And that 4,200 is still providing quite a bit of support here, or resistance, and it's getting into a narrow range. And what I would like actually for investors and traders when I talk to Blueberry is to compare this to probably crude oil up until probably 3-4 months ago when the war escalated in Middle East, because the setup was actually probably very, very close to identical. And what we've seen on crude oil is absolutely exploded and broke out of the range on the Middle East tensions. Now, I'm not saying that's going to happen with gold, especially if crude oil continues to head higher and inflation picks up. In fact, actually, it's probably going to have an inverse relationship. And in fact, I would be looking at 4,100 to 4,200 as a key support level. Any break below that, we are probably likely to go and test that 3,400 to 3,600. Break above those levels and a clear upstrong push up above that 4,200 would provide a lot of momentum and probably gold bulls to come back into the play. We are seeing a re-escalation, as I mentioned, in Middle East. We're seeing a lot of tensions coming back onto the table, and as a result of that, gold might attract some interest.
All right, finally, let's get into Bitcoin, digital gold. Facing a bit of a flow shock here, Zoran.
Yeah, I'd like to think of it like if I see a one-day bearish move in any product or any chart, I would like to see it's a knee-jerk reaction, and it's probably more so like fear or a bit of a nervous hands. But when you see a systematic move like we have actually seen on Bitcoin over the past 9 or 10 days, then to me that rings a bell that obviously there is an institutional play here and there is something more brewing than just a knee-jerk reaction in the market. And we can clearly see that on Bitcoin. And look, just for comparison on the chart here, we're seeing a bit of a structural play. So if you have a look at it from October highs when Bitcoin reached 126,302, Bitcoin is actually dropped around 41% at the moment. To back that up, we are seeing exceptional amount of outflow ETFs going from Bitcoin, and especially from BlackRock and those that are actually close to the US. Now, there is some positive news around the regulatory aspect coming out of the US. But at the moment, I'm looking at these charts and I'm actually seeing a very, very bearish narrative. In fact, actually, the last move that we're seeing at the moment is around 32% from a recent high of 83,000. As a comparison, if we have a look at the previous two bearish moves on Bitcoin, we can actually see that it's dropped around 38 to 40%. So if we are going on something similar and markets do coincide, then we should see a test of that $68,000 on Bitcoin. Break below there would indicate further sell-off and likely a move towards that $55,000 to $60,000. We're watching this very, very closely because the last couple of days we are seeing astonishing amount of outflows from Bitcoin ETFs. And if this trend continues, then it's very, very hard to be bullish on this thing.
All right, Zoran, we'll leave it there. Thanks as always. Great charts. Zoran Kresovic there from Blueberry Markets. That does it for this edition of The Trade. Be sure to join us next time.